And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Market Recap. I am Dan Hodgman. It is Wednesday, January 5th. The Fed's coming out strong. They're getting a little bit more aggressive, and you're seeing that in all the markets across the board. We're seeing a little bit of sell-off, a little bit of concern, more digestion than anything, though. Let's be realistic here. It's just saying what they're leaning into. They're going to start leaning into the tapering. We knew the tapering was coming. The idea of raising rates at the end of the year. We knew this was all coming. They're just saying it, and we're trying to get a little bit more aggressive to all of this. So just a little digestion, nothing to get too concerned about just yet. But we do have a lot of stuff going on, right? There's talks about, hey, is a fourth stimulus check coming with this Omicron variant out? Well, maybe. Maybe coming in a different aspect because things have changed so much over the last 2 years. Got that going on. Dow's going to have their first down day of the year. I mean, we're only 3 days in, but they're having their worst day of the year. Amazon, worst performing of the FANG stocks in 2021. So there's a lot going on, a lot of information. You've got crude oil. They have a draw, right? There's a draw in crude oil, which what fundamentally says crude should move higher. We're pulling supply out of the marketplace. That should increase demand, which sends price higher. But there's also major concerns with this Omicron variant and possible cutting back on travel, that demand is not going to be there. So there's a lot of factors going on that as traders, we need to think about. It's not just about that one little fundamental, but we got to factor in everything else. I think crude oil is a prime example of that, right? You're hearing about flights getting shut down. I've heard about some crazy stories about people testing positive on the plane. I heard a story the other day. Someone tested positive on a plane, and then they had to go quarantine in the bathroom, in the lavatory on the plane until they landed, and then that person was let off last. So there's things happening. So there's going to be concerns about demand and usage of oil. So is that just because they're going to continue to pull supply out of the marketplace? Does that mean prices are going to go up? Well, if demand isn't there, they got to sell it somehow, so possibly prices will come back down. So we do have crude oil pressing higher today. Like we said, we got stocks down. S&P's kind of held pretty quiet most of the day until 1 o'clock when the minutes came out. And since then, it's been a steady break hard. Nasdaq, similar, but Nasdaq was kind of showing a little bit of a sell-off before the minutes came out, right? We've noticed that the Nasdaq has been kind of pulling back a little bit more than the others. You got Dow that was making new highs. This week, you've got S&P was making new highs. Last week, Nasdaq's not there. So Nasdaq is the weaker of the three at the moment. Euro, on the other hand, opens up this morning on a nice trend to the upside, but just like yesterday, started to fall into a pattern. And then same thing. Fed comes out, sends that one lower. Gold. Gold. I said euro. I meant gold there. Gold follows kind of yesterday's moves. We got a nice rally off the open. Market takes off to the upside, falls into a little tight pattern. Again, we're seeing this pretty consistently in the gold market. We're seeing that fast, quick move and then getting kind of tight. So if you're a gold trader, you kind of want to be there right in the morning to avoid some of that chop. That market with the news going on. Oh, and by the way, rates continue to scream higher. So you do have rates higher, which means gold lower, treasuries lower, and euro lower. Euro was trending higher all day, and then same thing. Fed comes out, kind of put the kibosh on a lot of these things and sent everything lower. So there's opportunity out there. It's just a matter of finding it, making sure you're setting yourself up for success. So again, I'm still fighting this cold, 100%. Non-COVID, so that's great. Just a standard cold, but I do apologize. I do sound a little nasally, but we're getting better. So if I stop to catch a breath or drink some water, just so you know. All right, let's go ahead and take a look at our charts here. PK, Jim, and Sammy, good to see you guys. All right, let's go ahead and take a look at our crude oil market. Like we said, crude oil started continuing a trend, right? We're maintaining this trend to the upside. We love seeing that, right? Directional markets. But here's what we got to pay attention to. We've got the number came out here at 9:30 this morning. Very volatile time. But you know what it didn't do? It struggled to make acceptance to higher levels. This market held pretty steady right here at this 78.40. As a trader, we have to recognize we're not making moves higher. We're seeing rejection. We're hitting that wall. At some point, this wall is going to either break down or return for us. We got the return. Market did broke pretty heavily, rolled right back to value point of control from yesterday. So we saw a nice break there. Next, let's go and look at the S&P 500. S&P 500, like I said, today was holding pretty steadily until the number came out. And here's what I was looking at. I'm watching yesterday's swing low, overnight low, and that's what I'm looking for here today. I'm looking at that as rotation to the low side. We struggled once we opened up to accept inside value. What I'm looking for is market to move down to swing lows. I got two prior swing lows that I really like. To me, that's what I'm looking for. I'm looking for the short up above to rotate me lower. And then I'm getting out before Fed. Fed came out, we got a little volatile and sent this market lower. So to me, as a simple trader, I'm looking here before the number comes out. I'm looking for rotation because we're not accepting inside value. Got to look the other way. All right, next, let's go ahead and look at the Nasdaq. Nasdaq a little bit weaker. Like we said, this started making that trend lower all day long. But here's the difference. This market was holding inside value. We were holding inside value. As we opened up, market was trading right at point of control from yesterday. Below settlement price up at 16,275 3/4. 275 3/4 all the way up here. Market failed to get to settlement price off the open. What's that telling me? I'm looking rotation lower. I'm going to see if I can get this market to rotate to value low off the open. I'm going to take that move. I'm going to look for rotation to value low, and then I'm getting out again before that 1 o'clock number comes out. That's my concern. I want to be out before that, and I want to take trades that are within my system. Trading outside that system during a number like that, that to me, that's not where I want to be. That really isn't where I want to be, because then I'm banking or I'm trading on direction. I'm trading on this huge momentum swing, right? We know fundamentally if the Fed's getting aggressive, it should send stocks lower. Absolutely. But you can get caught in a quick pullback when the market's volatile like that. All right, next. Let's go ahead and look at gold. And like we said, gold making a nice move all day, kind of continuing with the overnight trend. We're seeing 2 days low to high. We started here today. We went low to high. We saw it failed pretty quickly. We didn't make it all the way up to last week's swing high, but that's okay. That to me is a pretty nice check. We came and checked that swing high, and then this market, just like we've been seeing, we get that volatile first hour, 2 hours of the day, and then it gets pretty quiet. Fed comes out, says they're getting aggressive. Digestion, a little bit of concern. Hey, let's get out of things right now until we have digested everything that's happening. This market broke down again, so that's where I'm going to be out. I don't want to be active during this time. I want to be taking my trades ahead of time, and I like this open. Pulled back a little bit. We did come check yesterday, almost to yesterday's point of control. Took right off. As we fail checking that point of control, that's where we can look for this market to move. Next, let's go ahead and look at the euro. All right. Euro, same setup as gold. Open up, took off to the upside. But here's the difference. Here's what I liked with this one. Euro pulled right back to value from yesterday. Could not get inside. This, to me, is a great opportunity right off the open. You take that long, very cheap long, right? We're getting in here. All we're looking for is a bounce off of value from yesterday. Market did that really nicely off the open. Took off to the upside, maintaining trend. Fed came out. That's where I'm gone. Fed came out, sent things lower. All right, next. Up. Didn't want to click that. All right, and here we go. 10-year note. We know yields have been on the rise here for the last 3 days. Same thing. Yields continue to rise, sending treasuries lower. What are we looking for? Where's our opportunity? Well, if we're expecting market to move lower, off the open, we saw a little bit of a pullback, struggling to go make a new high. Boom. We short that. We run that thing down all day long. All right, David, I see your question here. My setup is pretty simple. run a couple different moving averages and volume profile. Volume profile, we looked at this yesterday. It is a 70% value area. I run it on strictly pit hours. So here we go. We've got 10-year note opens up at 7:20, closes at 2 o'clock. So that's when I'm running my value from. I'm doing it for each different market. So I have that. I put a volume down below. On my personal charts, I do run a Hull moving average, which we do have over here on our Nasdaq. We do have a Hull moving average. Whoops, wrong one. This is an EMA. So I run EMAs and SMAs 20 period. And then I also run the Hull at a 20 period as well, the Hull moving average. So those are my charts there. All right. That's what we got going on here in these markets. Norman, good to see you. Bill and Dag, good to see you guys. Nasdaq was a fun one. Absolutely. All right. Bitcoin continues to kind of slump a little bit, $44,120 a share there. And like we said, we got a down day here, so we should expect to see some stocks taking a hit. Airbnb down $162 a share. GameStop, big down day here in GameStop. Just about a month ago, we were over $200. Now we're trading at $129 a share there. AMC continuing down. Is the year of the meme stocks officially over? I don't know. We'll have to see what happens. AMC down to $22.75. Tesla, which was at $1,200 on Monday, continues to take the hit. $1,088 right now. Robinhood, I have it up here. We don't even need to keep this one. Just continues to steadily grind lower. $16 a share. Rivian is down as well. So across the board, everything is down. A little bit of concern out there. Rivian actually pretty close to that IPO price of $72. The thing rallied up to 100 something. Getting back to that IPO price. Is there, we're going to see some buyers coming in? I don't know. You might see me coming in there. All right. So that's what we got going on here today. Tomorrow is Thursday. You guys know it. Every Thursday, jobless claims 7:30 a.m. Central Time. We're also going to have international trade in goods at 7:30, factory orders, and ISMs at 9 a.m. Central Time. And those of you that are natural gas traders, 9:30 a.m. Central Time. And don't forget, Friday, unemployment numbers. That's what I got for us here today. If you guys haven't signed up for John's Foundations class, make sure you do. You can find that on the website, or he'll drop the link every morning. Really looking forward to getting everyone in there. It's going to be a great 4-week class, 4 days a week, I think, an hour a day. Really great education. He's been working hard on this thing. So anything from basics to veteran stuff, you're going to learn from him. So make sure, if you haven't already, you do sign up for that one. And on that note, I'm going to go ahead and sign on out of here. John will be back tomorrow morning, 7:45 a.m. Central Time with the market forecast. So until then, stay safe, wash your hands, trade smart, trade well. Look forward to seeing you guys in the markets. Take care, everybody.